Hello, dear traders, ladies and gentlemen. It's another session we look into a very important aspect in trading success. And the topic for today is reprogramming your mindset. Bringing for you this discussion today is me and my colleague here, Sam. Sam, you want to say hi?
Hello, guys. Today we have another interesting session, and hopefully you're going to pick a thing or two from the session today.
Sure, it's interesting. So we welcome you all in this discussion. So today we want to step a little bit away from the charts and look at the mindset, okay, or the frame of mind that you want to have when you're trading. We've been looking so much into trends, trading strategies, but then there's one very crucial aspect in trading, that is your mind, okay? And I want to look at it this way, that mind is like the microchip that drives your system, right? The way you're making decisions, not only in your daily life, but even in trading. And
Yes,
yeah, if you lose your if you get disturbed a little bit and you're not able to hold your cool when you're trading, yeah,
and then things can go wrong very, very quickly.
Things can go haywire, yeah.
Yeah.
That's where emotions set in. Now you start making decisions that are not even based on a trading strategy, and then all of a sudden you start asking yourself, what's happening? Yeah, you have all the trading skills, you've got all the tools to analyze the market, you've been doing it over and over, but you realize you're not able to get everything in hold. And that's what we want to look at today.
Exactly. So at times you'll find you've planned for everything, you have a strategy, but once something goes wrong, then it all hell breaks loose. So you stop following your rules, you start thinking of recovering your account, and then you just throw your rules out of the window, and from there things start going south really, really quick. So it's good to have a right frame of thought. It's good to know what exactly it is that you need to be cognizant about when you are trading, so that you keep your emotions intact and follow the plan throughout.
So the education that someone goes through, learning through the YouTube, coming to us for mentorship and practicing it on your trading platform, that is really rewarding. But it's only rewarding if and only if you have the right mindset. Okay, so once you go the wrong way, then getting back again on track is quite some job, right?
Exactly. Especially if you've gotten to the point where you can't even recover your account.
Yeah.
No.
So bad habits once developed, it becomes very difficult to replace them with good practices. So it's a lot of work. It's a lot of work that someone does. And I think I would want to persuade traders. It's not only that you look into the charts, right? It's not always that you analyze the market and you look at the market structures. Sometimes you want to keep keep the charts a little bit away and ask yourself, how do I need to prepare myself even before I get to the charts? Okay, because there are so many things that can come up and they throw you off the balance, and you realize you start overlooking some things. That's what you want to look at today. How should you prepare yourself, and how do you need to be looking at these markets, right? Right, Sam?
Yes.
And looking right straight into our first slide, it's having a growth mindset. Yeah. And when I talk about growth mindset, it's all about having the view of always building yourself into the future. Okay. That is of course, we don't all start in these markets knowing about it. We're blank.
Yeah. Right? The funny thing is, a lot of people getting into the industry, you can never know what you do not know. You can never know that you do not know. So the only way you can know is when the market tells you do not know.
Yeah. And there's always a starting point. There's always a starting point.
Yeah. So sometimes we might think we've learned enough, but then we go to the charts and then things go south again. So that growth mindset usually helps a lot, and having that eagerness to just continue learning, because we are all always learning from the market every day.
It's a different experience every single day.
Yes.
And that's what makes this market quite interesting, because that's why we get the opportunities. It's quite dynamic. Today you are having an uptrend in a different market structure. Tomorrow we'll be having an uptrend in a different market structure, right?
Yeah, exactly.
And yeah, so it's all about staying longer so that you're able to see, even when you have a different market structure, then you can understand what's happening. Yeah.
Yes.
And that's when it's only possible if someone is willing to put in their time and practice and have the growth mindset such that you have a strong vision of success in your trading, and you put in motivation, you put in commitment, and then have a way of keeping yourself motivated.
And learning also.
And learning.
And exactly, because that's the biggest one of the, the average trader is a very smart person. So it's very easy for them to fall into the trap, especially when they've demo tested their trading and they're about to get to life. It's very easy for them to assume, okay, I'm good, I know everything, I don't need to learn more, I just need to trade. And then you get to the point where your strategy has worked maybe for 2 or 3 weeks, and you don't want to improve on it, or you don't want to keep on learning, because if you don't keep on learning, then the market is going to eventually catch up with you and show you that you still need to learn more.
Maybe another thing we need to bring up when it comes to growth, the growth mindset, is where this one cuts across the belief of you want to make money so fast in this market. You want to become a millionaire immediately after 1 month or 2 months or even 3 months of being in these markets. Yeah.
Yes.
You want to think of the compounding factor in trading, where getting small returns, but you're going to spread those returns towards a long time. You're not going to have a 1 month or 2 months or 1 week growth, and then all of a sudden you find yourself falling back again because someone is getting greedy, right? So this one again boils down. This is where it links to trading strategy, right? That you need to have a trading plan. A trading plan is a guide that is going to at least give you a rest. Yeah, you take some time off the market because you're waiting maybe for a trading session which has not come up. Maybe you've traded in the morning, right? During the London session, you're waiting for the US session, and during that time, you refresh it up. And one thing that gives a trader that type of like a relaxation is knowing that I'm waiting for a plan. Okay.
Exactly.
I'm waiting for the setups to come up. That's what I'm going to that's why I'm going to get my setups. And again, Sam, you had something?
So your setups are somewhat independent of how you feel that day, or how you are, or what your frame of thought is at that day, so that it's able to function on its own, and you're able to assess your strategy as it goes.
Totally independent. I think it has to reach a point whereby whether you need to grow to a point of whether you're mentally disturbed or not disturbed, then your setup is quite clear that your emotions won't come in between to disrupt the way your outcome is in the market. Yeah.
Yes.
But always, you see, we're human beings. Sometimes these things slip through our hands. You always need a mentor. You need someone to speak to, right?
Yes.
That's why it's always, sometimes there are people who would recommend that you be part of a trading community. Don't be trading alone. Be in some form of like a community where you can speak about the markets. Maybe you're not the one who lost that day. Okay, maybe you're not the one who is feeling that, right?
Yes.
So pressure will always come when you're trading. Again, we're human beings. When you make a profit, you become very vibrant. You're now excited.
You have that euphoria of
that's euphoria is the right word. You think it's gonna repeat itself every now and then.
And then you start planning for where you're moving.
And then
the trip you're trying to make. Yeah.
So at that point, traders forget that there is that need to calm down, reduce that excitement, because you're likely to start forgetting the rules that you need to apply, because you're thinking that now the next time, because I'm used to making profits, so next time it's going to be profits just before things flip down, right?
Exactly. So you get a situation where someone risks more than they should, or they trade more than they should, or they take setups that are not even clear or even part of the strategy. Because now you're thinking, you're counting your account with the profits you've made. Meaning, if say you had $1,000 and you've made 200 profits, then now you're starting to think about risking that 200, the entire 200, because now you're counting your account plus, instead of resetting yourself back to 0.0, where you start again from every trade.
Yeah,
so
asking yourself, how did I even reach here? So that you want to repeat the same process over and over again to be able to grow to that level. And maybe on the point of Sam, on the point of where you're talking about looking at your success in terms of how much you've grown your maybe the profit you're making. I think the best way is to look at a percentage. Okay.
Yes.
The best way is to look for a percentage, because even when you look at a risk, you want to best calculate it using a percentage. That's how you know whether you're growing. Yeah.
Exactly. Yeah.
So, and one way of reducing the pressure, and we talk about pressure here, it could be like excitement and feeling disappointment. One way of reducing that pressure is embracing that you're in a risky market. And of course, you're likely to get profits or losses equally.
Yes.
Yeah.
Yes, and also recognizing when you're under pressure, because if you recognize, okay, I am not thinking straight. If you just know that you're not thinking straight at the moment, then it's going to go a long way in preventing you from making some choices that you wouldn't have otherwise made.
Yeah, exactly. So one of the things we mentioned even in our trainings is right from the beginning, because we want to get the traders prepared right from the beginning. We talk about have a process and practice. Okay, have a process, then you have a trading plan. Make sure you practice it. The reason why you need to have a process is be sure that you can prepare yourself right from the beginning, knowing that, well, I'm getting into a market where I can either get profits or losses. Even if you have a trading strategy, it won't be giving you profits all the time. Yeah. And I think we'd want to have traders appreciate this, that there is no one trading strategy that will be giving you 100% profits. There's no one strategy that can have can be like 100% accurate. What I see in I don't know whether you also view it this way, Sam, that a trading strategy, because we have got hundreds of thousands of them, so many strategies. So the only thing you want to have a strategy, according to me, is to at least shape you and give you certain way of dealing with the markets, so that you're not random.
Yes.
Okay. Like
you're trying to take the biases out of your decision making, and the only way you can do that is if you had a strategy.
You're on point.
Yes.
You're on point. So I get the questions of which is the best strategy you can use in the market, and any strategy is the best if you've taken time to understand how best you can use it. So in this case, so that you don't go out of the point here, is you want to reduce the pressure in trading because you're following a plan, okay? And you want to appreciate that you can always get profits or losses, right? The market is never wrong. We can always be wrong, but the market is never wrong. We can't control what happens in the market, but we can control when we buy or when we sell. Okay, it's we always well, I like saying that the market plays the is it chase me kind of a strategy, or kind of a game where you're the one to follow it. Yeah.
Yes. Yeah.
Find where the trend is, where you're going to buy or sell, right? You miss it out, then control the losses.
Yeah, but a big problem is a lot of traders try and guide the market, or they try and want the market to move or behave in a certain way, which is never always the case. And that now leads to frustration, especially if you're under pressure. Then it's going to really take a toll on you, and it's going to make trading feel so tiresome. Because sometimes you'll stop trading for some time and you'll realize, hey, you've done a lot of work, and it's just because you've been trading with so much pressure that it's becoming overwhelming. And trading shouldn't be that okay, it shouldn't be that full of pressure.
You should allow the outcomes get into your nerves. If it gets in your nerves, then someone starts getting emotional. And one thing that you mentioned as we were just in this conversation, you said you as a trader, you need to follow the plan, right? You need to follow the plan. You need to avoid maybe over trading or revenge trading. Okay.
Yes.
It's really very important.
So now the biggest thing with why we have the training sessions and the classes when our offices is because we need, or we try and assist traders come up with their own plans and then ensure that they follow them to the letter. Because sometimes you need someone else to be checking up on you and to see what mistakes you're not even seeing yourself.
All right. And then the expectations. There's this question I always pose to the traders when we're in the workshops, and I ask someone, for example, if you want to open a business outside there, and it's a business worth 20,000 shillings, let's say, for example, $200, how much returns would you be expecting, like at the end of the month? How much returns would you be expecting at the end of the month? Like, for instance, if I pose this question to you, Sam, you have, let's say, hypothetically, you have a business of $200, around 20,000. How much would you get, like, at the end of the month? And you would say it's something satisfactory.
200 and what thousand?
Okay, you've 200. Okay, $200. That 20,000 business. Hypothetical case. For me, if I get a return of around, look at how the markets are. If you like a return of around profits in terms of like profits up to like 100, that's 10,000.
Yeah.
Looking to the amount of money which,
that's around 50%.
50% the whole month, right?
And
if you're breaking down maybe to a single day, it will be something maybe to a level of is it how much is it if you divide $100 divided by maybe 20 days, that's around 500 a day. That's in profits. And then the thing is, if you come to trading, if you do $200, 20,000 is $200, right? Hypothetically, okay. Now try to translate that amount of money into Kenya into dollars, and then $5 profit could be, or 500 shillings could be around $5. And then if that is the case outside there, but now if you ask a trader now, where they come to forex trading,
I think I get where I get where you're coming from.
That's exactly where we're going to, and you put $200 in your account. Okay. Are you going to be patient enough to accept a $5 profit in a day? So that now you're waiting to, you want to be consistently taking a very small risk of your account and getting a small percentage of profit, but then it's something which you can sustain. It becomes very difficult, right?
Because the possibility of making so much is always there.
And that's where now the realistic expectations come in. Are we even realistic? This is where things start going wrong. Okay.
And even when you're to ask someone, if you deposit in a bank for a whole year, how much are you supposed to get? It's around 6-7%.
Well, we might not get the right figures, but you see,
it's around a fixed deposit.
Quite a small percentage.
Exactly.
Not very big percentage.
If you invest in bonds, for example, it's around 11%. And that's passive. That's passive income. If you most businesses make around 30% in returns per year. And then there's a trader trying to double their account in how many days? 5 days, one trading week.
And that's why now you see, some people will speak about this market not being real sometimes, or maybe some will even want to say it's a scam. But in actual sense, we don't want to be realistic. And this is why we have these educational programs, so that we show everyone how they need to approach it, right?
Exactly.
You want to be realistic. And again, another thing is also it's also dependent on how much you're investing or you're putting in your account. You can put again some very small amount of money, and also you're expecting a very big growth. You want to work in terms of a percentage, like you've said. When you look at investment locally and the businesses locally, there's a percentage and maybe a general percentage that you'll see is the growth.
Exactly. So if you compare. if you compare that with trading, it's supposed to make, it's not supposed to be something that overtakes those other businesses. It's supposed to be something that makes achieving 30-40% a year easier.
Because if you look at $200 account, for instance, and I'm talking about $200 just to hypothetically to make things easy to understand, and you're looking for like $5 in a single day, you might want to split that one into 2 trades, for instance, and for every single trade you're looking for $2.5.
Exactly. Right? And that is very, 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 very easy to make, especially if you have a strategy that you're comfortable with. Yeah. But then people attach expectations to the profits, and then that's when things start.
if they doesn't match up, then it becomes a problem. So it's good to treat forex trading like a business, and you want to be realistic in your expectations, all right? And also be realistic in whatever you're investing in your account. Is this something that can give you a return that you feel is worth? Okay, and if you put a very good amount there as well, are you realistic? Because if you don't get realistic, that's where people start putting crazy lot sizes, right? And maybe even avoiding putting stop losses. Someone forgets about the rules of trading. Yeah.
Yes.
This is where unrealistic expectations of greed come in. Someone wants to grow so fast, and also the influence of maybe social media, people outside there posting flashy things that is coming from forex. Well, that's them. Be real to yourself, right?
Yes.
If you're starting up, then appreciate that you have to build the skill, right?
Yes. Because if you look at all the most famous popular traders in the world, most of them, and even the biggest hedge funds, most of them are just clocking around 40, maybe if you go too high, maybe 50% a year, an entire year. Yeah. So what makes someone think that they can do double every month? That's I don't know. I don't know how many percent return per year. Yeah.
It's very possible, but again at the same time, very, very risky.
Exactly.
It's very possible, but very risky.
Yeah. So it's very possible, but then is it sustainable? That's the word. Are you able to do that over and over and over again? That's the question. Because yes, you can put a large lot size on your account, and then you just double your account. But then can you repeat that every other time?
You try repeat it and you crash the whole thing the next day.
Exactly. Yes.
Okay. Yeah. So it's a growth process. You need to embrace it. Yeah. Sometimes we traders you sometimes look at the market and realize you've hit your target today, but you look at it, you say, oh man, there's so much opportunity. You want to place another trade, but then you realize, well, I mean, I'm done today. I'm done for the day.
Yes. Yeah. Taking breaks is also very important because
it's very important. Yeah. So on this point where you were saying that you don't want to fix your targets like an X number of dollars in Y days. Okay, it's good to have targets, yes, but make it a percentage. Make it a percentage, and let that percentage be fixed to or maybe related with your trading strategy, and it's really going to give some good outcomes. I'm looking on the chart on the attendance or the attendees, and I see really everyone is lauding these sentiments that we are talking about here. And Alex is saying mindset is the real deal. Yeah, sure, that's the real deal. Yeah, Josephine is saying mindset is the key. That is the microchip that drives the decisions that you make in the market. Champion is asking, is it possible for us to have okay, yeah, you can ask the questions, okay, and we here will be answering you. And thank you so much for being with us. We really appreciate engaging with you guys because we are passionate about giving you the right way of looking into these markets. Back to our slide here. Be confident in your trading, but watch out for overconfidence. It's a very delicate balance, don't you think so, Sam?
Yeah, especially after you're coming from a winning streak.
It's a very delicate balance.
Because that's when you tend to slightly ignore one rule or slightly take more risk because you know you've already made some money, so you can go bigger.
I mean, how do you tell me to be confident in my trading, gather the courage to be in the markets, but then again start telling me not to be overconfident? It's a very delicate balance to bring up in this market. And That's why we always go back to the trading plan and the trading strategy. It's just cuts off a lot of imperfections that are likely to throw us off balance, because we're human beings, and these challenges are likely to come up. So if you have rules, if you have a way of reminding yourself, or just like you said, Sam, at the beginning, being able to sense that, well, there's something just about to go wrong. Don't you ever ignore your instincts. It's always good, but also question them so that they're not going to lead you to something wrong. So what you want to do is have a system, or have a way of like questioning yourself and just ask yourself and know, am I getting overconfident now? Right?
Exactly. And then the other one I've seen is overconfidence with newbies. So you'll find someone who will be lucky. They've just started trading, and then they'll be lucky in their first attempts. And then now they get this overconfidence where they are encouraged to take more risks without knowing that they do not know enough. So that's one of the biggest dangers, with especially when you're beginning and you have this long winning streaks with you.
Sure. And I, by the way, I don't know whether it's I want to ask you this, Sam. I don't know why is it that when a trader has just started to master their skill, they've just understood how to apply the trading strategies, now they're getting some profits, that is exactly the time that they fall flat. Yeah,
I think
because now someone feels, oh yeah, I've become I'm the don now, I'm the master in the markets. They start forgetting.
It's called is it called the Dunning-Kruger effect or something like that, where you
I don't know about that. Maybe you can tell us more about that.
It's a learning curve between confidence and the knowledge you have. So when you start with little knowledge and you make some money out of it, then you gain this confidence where you think you are at a level where you can be trading either full-time or taking more risks. And then once the market humbles you, that's when you come back to your senses, and then you realize you need to learn a bit more before you go back to the markets.
Somehow, where's the victim mentality? This market is start viewing it in a different way, right?
Yes. Because you need to approach the market you need to respect the markets, because at the end of the day, as you said earlier, they're always right.
Yeah, sure. The market's always right, and we can always be wrong every time. We only control when we buy and sell. Yeah. So exactly. It's good to trust yourself in your analysis. It's good to believe in your trading strategy, but you want to keep to the rules. That's why you have the rules. They will help you to keep off from several mistakes that we make in the market. So it's a very delicate balance. Again, I'm repeating this one for, I think, the 5th time now. It's a delicate balance for you to keep in trading, in terms of the trading style, the strategy, the portfolio you're keeping. You don't want to be random, but you want to keep checks. You want to keep checks about yourself in the trading. So practice and practice and practice, and need to keep getting better in this one. As always, it's always good to keep on learning. Yeah, it's a continuous process. Be eager to learn. And I've not seen one good trader who is not a student of the market. Yeah, I mean, a lot of data comes in every single time, and it's different. Okay.
Yeah, and when someone learns how to trade, they tend to go a bit more silent, because they've been taught by the market to,
I mean, it's not good to close up on yourself and cut yourself off completely. Sometimes it's good to impart that knowledge to someone else, right? Because even if you're a good trader and you're making money out of the markets, I mean, if someone else makes the money, it won't affect yours, right?
The markets are too big they're big enough for everyone.
It's over 6 trillion. Is it 6 trillion?
Yeah, I think
daily volume. 6.2. I know it's quite big. It's even budgeting right now, so we never know. So it's always good to be resourceful. Also, be a resource to others, right? And you can even use that resource, use that knowledge to even make it earn for you. Yeah, as a trader, you can be a partner, right?
Exactly. And even in terms of being resourceful, even having a group of your fellow traders who can genuinely understand what you're going through. Say you have a losing day or you have a winning day. You know, it's not easy for someone who is not a trader to understand. Maybe you had a bad day that day. It's only another trader who is going to understand what is happening.
Sure. And you see so many people giving up in trading. It's because maybe you have no one to interact with. Yeah. You're not even going outside there looking for like YouTube resources and hear people's experiences, right? Being in these markets, I've read somewhere that it's the ability to keep standing and keep trading even when you're getting losses, because you know what you're looking up to in the future, right? So it's good to be resourceful, be eager to learn, consult, get mentorship, and don't give up so quickly. And keep a journal. Maybe by keeping a journal, you're able to learn where are you tripping, where are you making a mistake, and you're able to correct that one as we get along. Look at the economic calendar, look at the news, always be eager to learn what someone else is doing. Some will be willing to share, others will not be willing to share. No worries, you can always find a friend in this market. But the most important thing is keep resourceful, and you always find some quite important information. For example, on the economic calendar, check out on the daily events coming up. Yeah, they might give you a clue on where the price might be going next, or the likely sentiment in the market. Discipline, you can't compromise discipline. Yeah, because discipline is going to keep you to your trading strategy, keep you practicing trading in the right way. Yeah, there are always pointers of doing things and being random in the market. There are things to disrupt in the market always, right?
Yes.
And these are things like I want to be a millionaire the next day. This market is still very promising. I can make an extra coin, and you forget the discipline that you need to close your trading at some specific time. So discipline is very important. Yeah,
especially when you're in drawdown. For instance, if you have had 2 or 3 losing trades, are you still able to follow your strategy when it shows you another trade to take?
Or you just want to say this strategy doesn't work. Let me go look for something different.
Yeah. Can you go back to the markets and trade again once you've seen another opportunity? Or are you going to be hesitant? You see, that also requires some sort of discipline and a correct mindset and faith in your strategy.
And this takes me back to my view. This takes me back to my view that a trading strategy is not like 100% working set of rules. It is something to keep you focused in a specific way, that you're not going to be random in the market. You're not going to be gambling. Okay. And sometimes you would want to flout these, that focus a little bit on some specific financial instruments or assets that you want to understand even better. Yeah.
Yes.
Have a discipline. You can't okay, maybe if there are geniuses in this market that can trade everything from the from the first financial instrument listed on a platform, right, to the last one.
Yeah, to the last
maybe
one.
They are, right? But I think it's good to have some discipline pegged around what do I trade, what times, what do I need to do, when do I need to pause, those type of things. When you lose a trade, like some you're saying, when you lose a trade and you lose another one, are you able to hold on? We're now going to start doing revenge trading. Okay, so discipline is very important. If you have a strategy and no discipline, you're likely to hit the rock.
Yeah, true.
Yeah.
I'm seeing a few comments from the.
Oh yeah. Yeah. What are they saying?
That's Paul asking about the signal center.
The signal center. Okay. Again, here we're talking about patience, right? And I want to link this on with the signal center, right?
Yes.
Most of the signals, most of the advice you're getting there, right? Most of those trades, they've been looked into by experts, right? And sometimes they're pending orders. Mostly they are pending orders. It's an advice of being told, like, you can look here, check out for this type of an occurrence. So then even if they are posted there, it doesn't mean that you have to enter them directly the way they are. Remember, you're a trader as well. You know how to analyze the markets, and you want to consider it an idea that you want to try and compare with your way of trading. Okay.
Exactly. So the main purpose of the signal center is to give confirmation with your own strategy. Yeah, it's to help you build your own strategy.
That's for sure.
Exactly. So if you already have a trade idea that you have developed independently, that's when you go to the signal center to just cross-check and see if there's any similar idea.
Yeah, I mean, it's also possible to invalidate those setups. You realize that so many of them will not even be open, and sometimes they expire, right? Because the market didn't go there. There's no one person who would have like 100% accuracy in the market, and it's just a way of identifying high probability setups. But sometimes, you also evaluate the setups based on the risk that it exposes your account to, or maybe it's again going back to what are you trading. Maybe you're being given a signal on euro yen, and you're someone who trades on cable.
Yeah? Exactly. So exactly, yeah. So it's just to confirm what you already know.
Yeah. So not every setup that you will enter, not every trade that you get there you will enter. You want to compare it with what you yourself see in the markets, and then take an action based on that. So cultivate the habit of waiting for the right signals for your trading strategy, and even for the signals that you get from someone else, or the decisions that you get from someone else. Don't take hasty decisions. I mean, this question comes at an opportune time. We are discussing about patience and hasty decisions, right?
Yes.
Yeah. So take time to also do research and do the market analysis.
And backtest a lot and do a lot of backtesting, because that's the only time you'll be able to be fully confident with your strategy to wait for setups, even in the face of opposing opinions or different opinions from friends, from groups. Yeah. So having that patience to wait for your right setups, because the average trading session is, I'd say, very boring, because most of the times you're just waiting for setups to occur for you to trade.
Exactly. So and it's very good that our friend here has raised this concern, and I want to repeat what the trainer was talking about in our session where we had a training on using the signals, right? And it's out there, even in that video which is shared to everyone who attended, that even the percentage, the win rate is around 40-something%, right?
Yes.
Yeah. So it means that they are set not to be like even more than 50%, right? And there is a point where when we speak about this one in our risk management, where you're looking at the win rate versus the risk to the reward. So you might have a trade which has got a very high chance of winning, high win rate, but the risk reward is going to be very small. Or you might have a trade which has got a trade setup which has got a very low chance of winning, but then if it wins, there's a likelihood of very high return. You want to consider those type of factors in your trading, and around the conversation of being patient in the market, you want to have very tight risk management, not very aggressive, because again, as a trader, you become very aggressive, then you limit the time of you evaluating the setup that you're getting, right? So probably if you find them wrong, it's because maybe you needed to take some more time, but you did not do it, right? You needed to evaluate your risk in the market, depending with the amount of equity you have, but you might not have taken time to do it, right? So it's always good. And I would want to persuade us and every trader, please try to evaluate every idea that you get. Not every advice that we take, not every advice that you get outside there that you want to take. There's this I've this common it's a saying, but you'll always be told, let someone advise you, but not let them decide for you.
Exactly.
I mean, we borrow so many things from the normal way of life into trading.
Yes,
Okay?
and trading really brings out who you are as a person.
Yeah, exactly.
And
so
it shows you that not all the time you'll be in control of your emotions also.
yeah, so outside there, even in our business, we'll be told embrace growth into the future. Don't want to run so fast. It's a marathon, right? You also be told about don't be under pressure, reduce pressure, act on act on things when you are composed. Okay.
Yes.
Don't act when you're sad or when you're too happy. You're likely to do a mistake. Yeah.
It's developing your character.
You'll be told about character. You'll be told about be realistic. Okay. Don't have crazy expectations. It's just the same advice you get outside there, but you want to borrow them and employ them in your trading. Yeah.
Yeah. Now the problem with the market is every time you break one of these rules, it tells you or it corrects you. With the market, that is,
Also, you will hear, don't be very overconfident, right? You want to assess your level of confidence as well. And again, be resourceful, speak with other people, don't be alone, right? You meant to be social, you are a social human being, right? You meant to interact with other people as well. Know your fellow traders. Maybe you might be thinking that your trading strategy is the best, only to meet someone who is riding these markets like you've never seen. So don't close yourself out. Yeah, share, and someone else will share to you, right? And discipline, patience. These are things that we will be taught outside there. These are things that we all experience them outside there, like in every business you're doing, and you want to take forex trading like a business. So today, Sam, as we're speaking about the right mindset, as we're speaking about reprogramming the mindset, because that's the topic for today. You want to at least sometimes traders take some time off the charts. Yeah. Take some time off the charts.
Especially, especially either after you're getting some euphoria, either from winning or from losing, having a losing streak. Because that's the time where you're probably going to not make the right decisions when you take another trade.
Alex here is saying he tried revenge trading and he saw dust. For sure, you have to see it's more than dust. Yeah. You try revenge trading, it's more than dust, because at that time now you're revved up. You're feeling like I need to get back my money. Look,
exactly, and that's because you have expectations on this money. You have things you've attached to this money. You have alternative ways you will have spent this money, and now that you've seen that your money is going, then you end up not following your rules in a bid to recover your account.
It becomes a little bit difficult. And as someone else, by the way, Steve was talking about FOMO. FOMO is fear of missing out. It's still an emotion that someone needs to control. Yeah, we didn't have FOMO here, but it's the fear of missing out, where you feel, well, this market now is so
or when
good.
When you're trying to chase a trade, a setup has already occurred, and you're still trying to follow it.
It means now you've already abandoned your setup or your trading strategy, your trading plan. Okay,
it's called also scarcity mentality, acting like that's the only setup you'll ever see in your life.
No, this market is here all along. It's been here. It continues to grow. New solutions coming up. Yeah, it will always be better. You'll always have an opportunity. That's where the mindset of patience and control and discipline comes in. Yeah.
Yes.
Okay. All right. Today we don't have as many questions as possible. Actually, you're getting comments in support of whatever you're saying. It seems that most of the traders are in agreement with us. Yeah.
That seems so.
It's really interesting. And ladies and gentlemen, I think it's been quite a discussion. It's always interesting when we're speaking about the mindset and the right frame of mind, because you see, these are things that we've experienced, right?
Exactly.
And that's why you speak about them passionately. And
the one thing is, even experienced traders still have these problems. So it's more. I don't think someone will ever get to the point where they have mastered themselves as a human being, because ultimately we are all human beings. But the
Mm.
best thing we can do is to recognize whenever you're having such emotions or such biases in the market.
That's what I wanted to loud, by the way. As we complete this session, I think we want to say you can't completely dissociate yourself or completely, as a human being, be away from emotions. You'll always experience them, but then the best way to control them is try and at least have a way of actually sensing, right, or recognizing when the emotions are setting up.
Yes.
Yeah, and that's going to be very
recognizing, exactly. Yes.
All right, then, Sam, you have something more to add? I don't see any more questions. Something more to add from your end?
I think recognizing emotions is where we should have left it at.
Okay,
that's the most important thing. Yeah.
All right. So then, as we end this session, it's been clean over 50 minutes, almost an hour speaking about these things. Want to laud the guys who have taken their time also to attend our session there at the Norfolk. Yeah.
Oh yeah.
Enjoy yourself. Enjoy yourself. Have those quite constructive conversations there. We're proud of you, and thank you so much for taking your time to attend. And also here in Nakuru, we'll be having the forum we were speaking about financial freedom this Saturday. So if you're listening to us and you're here in Nakuru, we invite you. Okay.
There'll be traders. There'll be
traders,
a variety of people you can interact with, network.
Exactly, financial market experts, and we'll be speaking about not only in trading but covering quite a variety of financial topics, right?
Yes.
Okay, so without much ado, thank you so much, traders, ladies and gentlemen. Have yourself a great evening today. Until next time, bye.
Bye.